School of Investment brings you update on highly intriguing topic that revolves around the legendary investor and billionaire, Warren Buffett. He is considered one of the most successful investors in history, with a net worth of over $100 billion. Warren Buffett is one of the most revered investors of our time, known for his uncanny ability to pick winning stocks that beat the market. In this video, we will delve deep into Warren Buffett's biography and his stock-picking strategies that have made him a household name worldwide. Warren Buffett was born in Omaha, Nebraska, on August 30, 1930. From a young age, Warren displayed a keen interest in business, finance, and the stock market. In 1956, Warren launched a small investment partnership with his family and a few friends. Over the next few years, Warren Buffett's partnership grew rapidly, thanks to his talent for picking stocks that outperformed the market. In same year, Warren Buffett merged his partnership with a textile manufacturing company called Berkshire Hathaway and took control of the company. Over the years, Warren transformed Berkshire Hathaway from a struggling textile company into one of the largest and most successful conglomerates in the world. Warren Buffett and Charlie Munger have been longtime partners in the investment world. Together, they have built Berkshire Hathaway. He began his business career at an early age, selling chewing gum door-to-door and delivering newspapers. Warren was bright and studious as a child and excelled in academics. Charlie Munger was born in Omaha, Nebraska in 1924. Munger's early life was filled with challenges, as he lost his mother at a young age and his father was institutionalized. Despite his setbacks, Munger persevered and attended the University of Michigan and later Harvard Law School. Buffett and Munger's investing strategy was simple yet effective. They always looked for undervalued stocks that were trading at a discount to their intrinsic value. They preferred to invest in companies that had a strong competitive advantage, such as a brand name or a unique product. Buffett and Munger were long-term investors, which meant that they held their stocks for a long period of time, sometimes decades. This helped to minimize their risk and maximize their returns. Buffett first became interested in Berkshire Hathaway, a textile manufacturing company. In the 1960s, he started buying shares in the company and eventually took control of it in the 1980s. Under Buffett's leadership, the company transformed into a diversified conglomerate that owns dozens of subsidiaries, including Geico, Dairy Queen, and Fruit of the Loom. Munger played a key role in helping Buffett transform Berkshire Hathaway. He provided valuable insights and advice on the company's investments and acquisitions. Warren Buffett and Charlie Munger are well known for their philanthropic efforts. In 2010, Buffett and his wife pledged to donate 99% of their wealth to charity. Munger has also contributed to several causes over the years, including education and medicine. Warren Buffett is known for his knack for identifying undervalued companies that have strong fundamentals, including a proven track record of earnings growth, low debt-to-equity ratios, consistent dividends, and pricing power. Warren Buffett is also known for his long-term investment horizon, which he often calls buy and hold. Warren Buffett's investment approach is geared towards buying quality stocks at discounted prices and holding onto them for long periods, even decades. This approach allows Warren Buffett to reap significant gains from compounding as his investments grow over time. Warren Buffett famously holds investments in well-performing companies such as Coca-Cola, Apple, and American Express, among others. In addition to his value investment philosophy, Warren Buffett is also a master of risk management. He avoids risky investments and never invests in companies that he cannot personally understand. To his emphasis on long-term investments in companies with competitive advantages, Buffett also emphasizes the importance of investing in industries he understands. Buffett has famously said that he doesn't invest in tech companies because he doesn't understand the industry. Instead, he invests in companies he understands, such as consumer goods, energy, and insurance. When it comes to the SVB bank crisis, Buffett's strategy of investing in undervalued companies in industries he understands proved successful. By taking advantage of discounted stock prices and investing in a bank he understands, Buffett was able to generate significant returns for his company. First on the list is the multinational technology conglomerate, Apple Incorporated. Berkshire Hathaway's stake in Apple is worth over $91 billion, making it the largest position in its portfolio. In the past, Buffett has praised Apple for its strong brand and loyal customer base, which he believes provides a strong barrier to entry for competitors. The company's strong financials and consistent earnings growth also make it an attractive investment for Buffett. Next on the list is the multinational conglomerate, Berkshire Hathaway Incorporated itself. Buffett's company is listed on the New York Stock Exchange and has a diversified portfolio of holdings across a number of different sectors. Berkshire Hathaway has been valued at over $430 billion, and its stock has consistently outperformed the market over the years. The third company in Warren Buffett and S portfolio is the multinational retail giant, Walmart Incorporated. Buffett first invested in Walmart back in the 1990s and has continued to hold the stock ever since. Walmart is one of the largest retailers in the world, with a presence in over 25 countries. The company's strong cash flows, low debt levels, and dominant position in the retail market make it an attractive investment for Buffett. Fourth on the list is the multinational investment banking company, Goldman Sachs Group Incorporated. Buffett invested in Goldman Sachs back in 2008 during the financial crisis, and his stake is currently worth over $5.5 billion. Buffett believes Goldman Sachs is a well-run company with a competitive advantage in the investment banking industry. Fifth on the list is the multinational media conglomerate, Liberty Global plc. Buffett's stake in Liberty Global is worth over $500 million. The company is a leading provider of cable and internet services in Europe and Latin America. Sixth on the list is the multinational healthcare company, Johnson & Johnson. Buffett's stake in Johnson & Johnson is worth over $8 billion. The company is one of the largest healthcare companies in the world, with a strong brand, robust financials, and a diversified portfolio of products. Johnson & Johnson's focus on innovation and research also makes it an attractive investment for Buffett. Seventh on the list is the multinational conglomerate, Visa Incorporated. Buffett's stake in Visa is worth over $10 billion. The company is the world's largest payment processing company, with a dominant position in the credit card market. Visa's strong brand, global presence, and robust cash flows make it an attractive investment for Buffett. Eighth on the list is the multinational pharmaceutical company, Merck & Company Incorporated. Buffett's stake in Merck is worth over $1.5 billion. The company is one of the largest pharmaceutical companies in the world, with a diversified portfolio of drugs and a strong focus on research and development. Lastly, we have the multinational entertainment company, the Walt Disney Company. Buffett's stake in Disney is worth over $10 billion. The company is one of the largest media and entertainment companies in the world and has a strong brand and diverse portfolio of content. Warren Buffett's stock-picking strategy is one that has stood the test of time and has resulted in tremendous success for the investment guru. The SVB bank crisis is a prime example of Buffett's strategy in action, with his investment resulting in significant returns. Buffett's focus on long-term investments, companies with competitive advantages, and industries he understands has proven to be a winning combination. As investors, we can all learn from Buffett's investment strategy and use it to create a successful investment portfolio. But first, let's give a bit of background on the SVB bank crisis. SVB Financial Group is a Californian bank that specializes in providing banking services to technology and life science companies. In 2020, the bank was hit by the COVID-19 pandemic, which resulted in a significant drop in the stock price. However, Warren Buffett was quick to respond to the crisis and made a strategic move with his investment in the bank. Buffett's strategy during the SVB bank crisis was to take advantage of the discounted stock prices and invest in the bank. According to reports, his company, Berkshire Hathaway, bought a large stake in the bank, which resulted in a significant increase in the stock price. Buffett's strategy of buying undervalued stocks during times of crisis has been a hallmark of his investment philosophy, which has led him to tremendous success. It's important to note that Warren Buffett has always been skeptical of using computers to make investment decisions. In fact, in his 2018 annual letter to shareholders, Buffett explicitly stated that he does not believe in using AI and machine learning to guide investment choices. He argued that these technologies cannot replace the value of human judgment and intuition. Buffett's point is certainly valid, as the process of selecting investments goes beyond just crunching numbers and analyzing data. Buffett is a firm believer in the power of fundamentals, and emphasizes the importance of qualitative characteristics of companies, such as leadership, culture, and brand strength. These are factors that cannot necessarily be quantified or analyzed solely by machines. However, Buffett's skepticism towards AI and machine learning may not necessarily be a condemnation of these technologies. Rather, it is a testament to an investment philosophy that has worked extraordinarily well for him over many years. Buffett has always emphasized the importance of investing in businesses that he understands and in which he has confidence, and that requires a substantial amount of research and analysis. For Buffett, this entails reading annual reports, closely monitoring industry trends, and forming a strong understanding of competitive dynamics within an industry. It's a painstaking process that he believes cannot be replicated by AI. It's worth noting that, despite Buffett's skepticism towards AI, Berkshire Hathaway has invested in technology companies such as Apple. Does that necessarily mean that Buffett has changed his mind about AI and the role it plays in investing? Perhaps not. Apple is hardly a pure-play AI company, and the kind of investment that Buffett makes in a company like Apple is likely influenced by more qualitative factors such as the company's brand strength or its ability to innovate. Many people question that why Warren Buffett doesn't invest in cryptocurrencies? The main reason is that he doesn't see them as a good investment opportunity. He has famously called Bitcoin rat poison squared and has said that investing in cryptocurrencies is not investing but speculating. Buffett believes that investing in stocks and companies that have a proven track record of success over time is a much more reliable way to make money. Another reason Buffett doesn't invest in cryptocurrencies is that he doesn't understand them very well. He has said that he doesn't invest in things that he doesn't know about or understand. Buffett is a value investor, which means that he looks for companies with strong financials, competitive advantages, and a good management team. Cryptocurrencies don't fit into this value investing framework as they don't have financial statements or a management team to analyze. Buffett has also mentioned that he doesn't invest in things that he can't control. Cryptocurrencies are unpredictable and their value can change rapidly based on news, rumors, and technological advances. Buffett prefers to invest in companies that he can understand and that have a clear path to profitability. Another reason why Buffett doesn't invest in cryptocurrencies is that he believes that they have no intrinsic value. Intrinsic value is the actual value of an asset or investment based on its underlying fundamentals. Buffett has said that he likes to invest in things that have a clear intrinsic value, such as companies that produce goods and services that people need and use. In conclusion, Warren Buffett is a remarkable figure in the world of finance and investing. His biography and stock-picking strategies are an inspiration to many investors worldwide, and his success is proof that with hard work, persistence, and a sound investment philosophy, anyone can achieve financial success. His value investment philosophy, long-term investment horizon, and risk management approach are timeless principles that can apply to any investor, regardless of their level of expertise. Thank you for joining me on this journey of discovering the life and work of Warren Buffett. I hope you found this video